Welcome, Ash. Great to see you. Great beard you're sporting there. Well done. They say imitation is the sincerest form of flattery. It's good to see you.
That's right. It's a new quarantine-driven invention for me.
Good to see you working on it. How's the family holding out over this time?
Yep, all good. I can hear the pitter-patter of three little boys running around downstairs as we speak, and I think the youngest one's getting ready for his midday sleep.
So, Ash, share prices have been incredibly volatile over the last few weeks. What are the conversations you've been having with companies? What are the things you're thinking about to manage money through what are pretty volatile and sometimes scary times?
Yeah, so that's right. I mean, markets have certainly been extremely volatile in the last couple of weeks, and we've even seen that continue overnight as everyone, whether it's investors or just people out there in the public, grapple with the path, not only through coronavirus, but the path back towards normalization. Now, contrary to what people probably think about share market investors, we don't spend all of our time, glued to our screens and trading all day. In fact, often the opposite is true. So in the international portfolio that the team and I manage, we invest in about 25 businesses globally. We believe these are some of the best businesses out there, and we aim to hold them for the long term. So we aren't trading in and out of them in response to short-term market movements. But what are we doing right now? Well, it really is just two things. I mean, the first thing, and first and foremost, is safety first. So we're speaking with our portfolio companies. First of all, we're trying to make sure they've got a strong balance sheet, they've got good cash flow, and they'll make it through this period and come out the other side strong. The second thing that we're doing at the moment is starting to transition and look for new opportunities. We have a long list of companies that we really like, and we're starting to spend time to review and think about whether we want to invest in some of these businesses now.
Would you be able to share some of the insights that you've been getting when you and the team have spoken to management, and how are management teams approaching this tricky environment?
Yeah, actually, a lot of our conversations with management teams have actually been quite comforting, and the businesses in our portfolio have certainly learned things from the global financial crisis. So when we talk to them, we're talking to them about their balance sheet, but also their strategy at the moment and how they plan to get through this. So the companies in our portfolio have really focused, post-financial crisis in building a fortress balance sheet. So, high cash balances. And a great example of this is Google. They've got $100 billion of cash sitting on their balance sheet. They'll make it through the storm just fine, whereas many other companies in the media sector, whether it's TV, radio stations, or newspapers, might not make it through. Secondly, companies have generally developed a playbook post-GFC in terms of what costs they can cut and what they can do for their business in downturns. So all of our companies that we've talked to them about these things, and we think they're well positioned not only to make it through, but to come out the other side stronger.
Yeah, it's interesting, isn't it? There clearly seems to be some haves and have-nots here, because while some companies seem to be very prepared, other companies have actually used the last 10 years to borrow more, and that doesn't seem to have been the wisest call, and certainly in reflection.
And absolutely, and you can think about a lot of retailers out there. There's a long list of them in the US, whether that's department stores like Macy or some of the sporting goods stores, who have actually used the last 10 years to take on more debt, to pay dividends out to shareholders. Their business models were already under pressure from e-commerce, and now they're really feeling the pinch. Many of those businesses probably won't survive, and that will actually be create benefits for other companies, perhaps in the e-commerce space.
Interesting. So definitely a time to be very picky and choosy. You've led very nicely there into opportunities that you're seeing. Obviously, prices moving around. What are the things you're looking at, and where do you think those opportunities might lie?
No, absolutely, and you do have to remember in the midst of all this that the times of the greatest opportunity are also the times of greatest uncertainty. So when things are volatile, it doesn't necessarily feel like a great time to invest, but that's why there are opportunities there. So we have a long list of companies that me, Chris and Harry have followed and worked on for years, a list of companies that we really like and admire and have wanted to invest in, and we're simply waiting for the right time. Now, we recently, 2 weeks ago, actually added a company called Starbucks to the portfolio that everyone will be familiar with. We've long admired the business. It's always been very expensive, but recently we got a chance to buy it with 40% off on sale. So we've added that to the portfolio. We've also increased our position recently in Amazon. Amazon's a phenomenal business, and we think it will actually benefit from the current environment, both its e-commerce business, but also its cloud computing business.
Starbucks obviously a global business, selling a uniquely addictive product. I've got to say, I'm missing my coffees. I think it's interesting. You start to think about the things you miss most, and a good cafe, good coffee is definitely high on the list. China is a part of the world that has obviously started to open up a little bit post-coronavirus. Really interested in how Starbucks is trading there, and have we seen people come back to these stores, and does that give us an indication of what might happen in the rest of the world?
Yeah, no, absolutely. And I guess the reason that Starbucks share price has fallen is because they have made some pretty big announcements, like closing their stores temporarily in the US. But you're right, looking at China does provide an interesting path for them through coronavirus. China is actually a really important part of Starbucks' growth strategy. It also happened to be impacted by coronavirus first, so we've got some good data from there. Now, back in January and February, Starbucks went through the process of shutting down literally all of their stores in China. But in the last couple of weeks, they've begun reopening stores, and now they're back to 95% capacity in China, and they've even reopened their stores in Wuhan. So there is certainly a path through this. The company's got a strong cash position, and they're actually in a position to keep most of the US employees on when many retailers and coffee shops are laying off staff. So they're going to be ready to serve customers again when we do bounce back from this.
You mentioned Amazon as well, and everyone, I think, recognises the retail brand that Amazon's got and the e-commerce business, but people don't know the cloud computing business as well. That seems like it's a beneficiary of this. Can you just talk about what's going on in that cloud computing world?
Absolutely, and the cloud computing business for Amazon is actually more profitable than the retail business, although it doesn't get as much focus in the public domain. It is a rapidly growing business as companies gradually start to move their IT infrastructure and their software from their own premises across to the cloud. Now, many businesses at the moment are probably wishing they had made that move more quickly. Microsoft actually put out some data the other day saying that in countries or in cities with lockdown, they're seeing a 700% spike in data center usage. So when people are working at home, they tend to use products that are connected to the cloud. So that's something that's benefiting Amazon right now. But then thinking longer term, what we think when everyone's back to work, IT departments are going to be working busily, making sure they have their disaster recovery capabilities up and running, and gradually starting to think about moving more and more of their software and their workloads across to the cloud.
Cool. Great to see there's some good opportunities out there. Actually, the last question I wanted to ask was really around mindset and how do you manage yourself through this kind of crisis? Because it is difficult seeing red on the screen day after day after day. How do you get confidence that these companies will recover and potentially be stronger after the crisis?
Yeah, and it's two things, and it firstly comes back to the safety first point that I mentioned earlier, but then it's also remembering to think long term. It can be really easy in the current environment to focus on the current headlines. But by taking the safety first approach of only investing in good businesses with strong balance sheets that will make it through, that provides a lot of comfort. And then secondly, by thinking long term, thinking about Starbucks again, the coffee shops are still going to be in operation in 2 years, 3 years, 5 years, and 10 years from now. People will still be consuming a lot of coffee. Yes, its share price is down 40%, but if you buy now, we think you ultimately do well. So by thinking a little bit longer term, it can help you see through the current turbulence.
That's great. Thank you very much, Ash. Have a good rest of your afternoon.
Thanks a lot, Frank.